Hi everyone, it's Grow with Joe here. And if you don't know who Grow with Joe is, that's me, Joe Bautista, and I run an investment advisory firm that combines self-development coaching with financial planning. So your one-stop shop to help you live your best life. And one of the questions that I received from one of my clients was, hey, what's up with this Apple stock split? And if you didn't hear the news, on July 30th, 2020, which is last Thursday, recording this on August 5th, is Apple announced that they were going to do a 4-to-1 stock split to help them to help increase the amount of shares out to the public. And what that really has to deal with is supply and demand and what Apple is trying to do to help increase demand for its stock. So this really goes down to, like I said, supply and demand. So I'm going to share my screen. So if you're not familiar with supply and demand, we have a upward sloping slope or line, which is the supply curve. And if we're looking at something as a commodity like apples, where this bottom line is the quantity and this is the price, the reason why the supply curve is upward sloping because it's basically a cost curve. So in order to produce more apples, you need to buy more land, you need to buy more seeds, you need to hire more workers, you need to hire more staff to grow these apples and distribute them and everything. So to produce more apples requires more cost, hence that's why the supply curve is upward sloping. The demand curve is downward sloping because typically when things are cheaper, we can buy more of that item. Or yeah, that's how it basically works. It's called the law of diminishing marginal utility. For every apple that you buy, every extra apple that you buy, you're going to get a little less enjoyment from that. So to compensate for that less enjoyment, you have to, you're willing to pay a lower price. On the 10th apple you buy, you're not going to pay $10 versus the $1 you might pay for 10 apples. And this all depends, but generally concept, this is how it works. And the demand curve is really going to affect the price in the short run. So if there's an increase in demand, so let's just say people just want to buy more apples because they really enjoy them, that's going to increase the demand, which is going to increase the price because now we have to produce more apples. And then the supply curve, the demand curve shifts to the left, which means there's a decrease in demand for apples. So let's say no one wants to eat apples because they're just tired of them and they want to have something else. And this is just a snapshot. But as you can see, this intersection between demand curve and supply curve is going to determine the price. So this might be $3 per apple, $3 at this to and one and everything. This is just the general concept about supply and demand, but as you can see, the supply curve is upward sloping, demand curve is downward sloping, and the cheaper things are, the 10 more people can buy that item. So now let's just look at the company Apple. So their supply curve is going to be vertical because there's no cost for Apple to say how many shares are going to be outstanding. So right now, Apple has roughly about 4.3 billion shares out there. And at Thursday, that closing price was roughly about, let's say right here, $3.85 a share. And so they announced on Thursday that they're going to do a 4-to-1 stock split. So that basically means that this new supply curve is going to shift to the right because there's going to be an increase of stocks available. And now there's going to be about 13.2 billion shares available. And that roughly is going to be 95 dollars per share. If you were to take your one share and divide it by 4, that's basically what it's going to mean. But in the meantime, what has happened is the demand curve actually shifted to the right because there's an increase in demand. And now the price is much higher. And this is basically what Apple wanted. They wanted more demand for their shares, and by lowering the price, they got that increase, that desire. So if you look at this new screen, this Yahoo Finance, you can see on July 30th, it closed around 385 a share, and there was 39 million shares done that day. But then the next day, you can see that the closing price went from 384 to 425, and that's because there was a lot more shares being traded on that day, and then it's been trending down since this time. But as we can see, the price has definitely gone up since they announced that news. Hence, there's increased demand. And when there's more buyers than sellers, price goes up. When there's more sellers than buyers, the price is going to go down. Generally, not like all the time and everything, but that's basically how the stock split is going to affect the price of Apple shares right now. But that was just at a snapshot. That's not including what's going to happen in a month from now. I'm not a fortune teller, so I can't tell, is the price going to continue going up or going to go down? There's other things to consider, like, hey, what's going on with COVID, other global factors that are going on. But that just to show you, like, hey, this is how many shares are available right now. They're going to quadruple the amount of shares out there. That's going to drop the price, but it's going to increase demand. So overall, it's going to get the pie bigger because the price has gone up 20% since that news has shown up. And what Apple does with this, it's up to them. I don't know. But that's just my perspective in terms of buy and hold. I'm not going to say I got to know your situation and everything, but that's just basically what has happened and what to think of a stock split and any other stock split that happens in the future. And then there's something also known as a reverse stock split. So Apple down the road could take those 13.2 billion shares available, and they could turn it back into 4.3 billion shares available, but that would increase the price. So it all depends on what Apple thinks is the best business strategy to take when it comes to their stock prices and how that can help them do other things within the company to help them grow it and everything. So hope you learned a lot about stock splits today and how that affects the price. Let's see how you can take that information, but please, this is not a recommendation for Apple or endorsement to buy the share. I'm just giving you my perspective. So please please do your own research before you implement any changes with your investment portfolio. And if you would like to have a complimentary consultation to go over your own financial assessment when it comes to retirement, just click on the link, growwithjoe.me/schedule, and you can schedule right there, or you can click on the link in the YouTube description box. So hope you enjoyed today's lesson, and remember, if you go with Joe, you can grow with Joe, because Joe knows Dell. All right, take care.